Good morning, everybody. Welcome back to another episode of the Market Open. It is October 4th, 2023, 8:47 a.m. And it just seems like the markets, news, politics, all of it cannot get as exciting as it's getting. We got a lot to talk about today. We have two new Palantir updates to get into, one being the NHS contract and a Bloomberg article that came out last night basically saying, look, Palantir is in the front running to get this contract. And the reason it's seeming a little bit more legitimate than some of the other sources is because it's Bloomberg, and Bloomberg tends to get these things right. Second of all, we will be doing the newest press release they came out with, which is with PWC. So they are furthering, expanding their relationship with PWC as a consulting firm. We're going to be talking about that. Very interesting sort of press release they put out today. We knew they had a relationship with PWC, but now it's going a little bit more further and obviously helping their distribution, sales, go-to-marketing, AIP stuff. So it's going to be fun to see that. And then we got to talk about this 10-year bond that hit 4.8% yesterday. Kind of close to 5%. We got to talk about that. We got a jobs report, which is kind of contrary to the JOLTS report we got yesterday. The jobs report showed that we don't have as many jobs that we didn't hire as many people. The JOLTS report is saying that we're trying to hire that many people. And I think that's why markets are actually up this morning, because that jobs report was actually very bullish in the context of reducing inflation. And then on top of all of that, the Republican Party in the United States of America cannot agree on their own leadership. And as a result of that, you are basically seeing a government in distress, a government that needs a new Speaker of the House. And if we don't find a new Speaker of the House, or we find some Speaker of the House that both sides can't agree on, that 45 extension for the government shutdown to not happen is likely going to be not the best situation in the end of November. Because if we could barely agree to an extension now, I don't know how we agree to an actual full funding for the government in regards to border and Ukraine stuff in November. And that sucks because December is supposed to be a nice little rally to end the year off. We might not get that if the government shutdown gets pretty bad. So we got a lot to talk about, a lot to discuss, a lot to break down. And let's get into everything. Missy Iger, Marcus, Ty Gordon, David, Markets Investing, Power Napster, Andrej, Joseph, Rachel, Bay Ray, David, Sethi Roth, Roy, Kelly, June, Triple Chewies, Tobor, Dex, Roy, Vishan, Marvin, Mateo, my guy, Selena, Bohan, Lenny, Daniel, Midwest, Zelena, David, Dex, 10 years going over 5%. Man, I hope that doesn't happen, but let's see what ends up going on. Win, Amit, you demand. Thank you for updates. Win, thank you so much for being here. This is a super, super fun part of the day. So thank you all for being here. Jeremy, Arroyo, Bay Ray, Kane. All right. We got to get into this market open. Juan Carlos, buenos dias. Buenos dias, my man. Hope you're doing well. Let's get into the market open. Bay Ray says, Chris Patel says that Kevin McCarthy leaving creates more credit risk. He said if the U.S. gets another credit downgrade, the 10-year will go well above 10%. He's right about that. If the U.S. gets another downgrade in regards to the credit rating, whether it's from Moody's or S&P Global, yeah, the 10-year is going over 10%. Now, look, the downgrade doesn't really matter. All of those downgrades we're getting in the United States is absolutely ridiculous because out of every company in the world and country, the United States is the best position to pay back our debt. The problem is the perception of the United States not being in that same position, which we know the stock market, completely runs on perception, leaves us in a bad situation. So, I mean, we'll see what happens, but the situation right now in the House and in the Senate is just not good. And if we don't get competent leadership anytime soon, we're going to be in a tough space. Before we start off to do all that, I did get a little gift yesterday. I guess a gift to myself. I got this iPhone 15 Pro Max, as you can see right here. It is officially the iPhone 15 Pro. So titanium, very nice, lightweight, super fast. I'm upgrading from the 12 Pro Plus. So very, very fast phone. It came with this wallpaper for some reason. I don't know why it did, but I'm not complaining about it. I actually really enjoy the wallpaper. So yeah, that's what we got. iPhone 12 Pro, iPhone 15 Pro Plus. I'll give you guys my updates on it after a couple of days of using it, but I like it, man. It's quick. It's fast. It's getting the job done. The overheating was a little bit yesterday, but now it seems fine. It seems like it's not overheating. So I know Apple's going to issue an update later and see that, but Ryan, no case, 100% no case, bro. I live on the edge. If I crack this phone tomorrow, I live with it. You know what I mean? No, I'm just kidding. The phone is coming today from Amazon. It's a nice little baby blue case. So we're gonna have a case on it. But I do get to enjoy a day of going raw dogging with the phone. So it's gonna be fun. June says you really need to change the wallpaper if you're not a 16-year-old girl. You know what? The Justin Bieber slander on this channel will not be tolerated. Okay, it's just look at that. That is perfection. That is just great. Now, did I like his last album? No, but like, did he have to sell his music for $200 million, which was a stupid deal in my opinion because his music is worth a lot more than that? Yeah, that was a really dumb deal. But the Justin Bieber slander will not be tolerated on this channel. All right, let's get into the first thing. Let's do 10 minutes on Palantir, and then we'll move on to the next stuff. So this article broke from Bloomberg last night. Okay, this article had all of us in the Palantir community going absolutely crazy. We've got apparently the NHS deal locked down. So Palantir closes in on controversial UK health data contract. I'm going to read a little bit from this. The 5-year contract, which may be extended by as long as 2 years, is worth $580 million, is designed to help the agency analyze medical data, detect patterns, and ultimately overhaul its entire system. This is for 70 million citizens. The deal is subject to final approvals and legal arrangements, but the government was on track to announce Palantir as the winning bidder as soon as this month. People familiar with the discussion said, asking not to be identified because the information isn't public. So these are people that reached out to Bloomberg that was like, yo, the deal's done. Don't put our name in it because we don't want to, be the source, but the deal is done. And then it just goes on into like why the deal is kind of controversial and why Palantir hasn't been able to get it, yada, yada. And then again, it says the NHS is the UK's national health service, the publicly funded operation providing medical care that's free at the point of access for the 67 million people living in England, Scotland, Wales, and Northern Ireland. Still, it's best beset by staff shortages and backlogs after the pandemic delayed less urgent procedures. Last paragraph, the impact on England's public healthcare system may be larger than the impact on Palantir's bottom line. The firm generated more than 1.07 billion in government revenue in 2022, is on track for 1.26 billion this year. The UK contract, while lucrative, is spread over the course of several years. So while it may not have major effect on Palantir's immediate results, it could serve as a beachhead for future sales. And that is exactly my point with the NHS contract as well. Honestly, I don't care if that contract is for like $100 million, $700 million. That's not the point of the deal. The point of the deal, and this is what I wrote on Twitter yesterday, is to be able to get the job done. So what I wrote yesterday is that this is a $30 billion company being trusted with 70 million people's healthcare data with the expectation to fix the system. The expectation is you get results, not that you just come in and you're bureaucratic, but you actually fix the system. Think about how many socialized healthcare systems around the world could be transformed via Palantir. The next 5 years is a case study to see if they can actually fix the NHS. And within 2 years, by 2026, we'll know when those results come in, if they are good. You can forget individual hospitals. Countries themselves will be coming to Palantir to procure the same software that fixed the NHS. Palantir will be known as the company that fixed the NHS, and that's a brand that is incredibly important. The deal, if we get it, also solidifies victory against propaganda from them being an evil company. If we get this deal, it means all the stupid campaigns in the United Kingdom around Palantir's evil, they're going to take your data, yada, yada, yada. That all goes to crap. And then if we fix the NHS, that really goes to crap, right? Because now you're talking about a company that fixed the deal that is not the evil spy company you think it is. And other countries will not have that much hesitation to procure their software. Faisal says, I'm from the UK. We need a system to fix the NHS. So hopefully Palantir does that. Yeah. And look, Faisal has told me many, not just Faisal, but many people from the UK have reached out to me saying the NHS is actually crap. There are some people that are in the comments that are defending the NHS like, oh no, it's like the best system in the world. The far majority of them are like, no. The NHS it's great in its intent, but it sucks. And like, we need something to actually fix it. And hopefully Palantir is the one that can actually fix it. So awesome new Palantir NHS update. Bloomberg's reporting it. So more likely than not, we're going to get the deal. And it's just time to see if it happens. We were up 2% in after hours yesterday. Currently, stock is, I think, at 1530. S&P right now at 422. So still not hitting the 200-day moving average on the S&P. Still not hitting there yet. 1552, up 4% in the pre-market. So this deal is definitely the reason we're up 4% right now. Will it sell off? Will it keep going? We'll see what happens. But that is the reason Palantir is up right now. Okay, the next deal we got for Palantir, and then we'll get into some more of the macro, is this new contract today with PWC. So I'm not going to read the entire thing, but essentially we extended our partnership in the milestone for our strategic alliance with the consulting firm. The alliance will see PwC leverage Palantir Foundry, the platform for integrating data analytics and operations, and their AIP to help clients identify and action strategies for value creation and operational transformation. The alliance brings together PwC's deep industry and functional expertise and Palantir's cutting-edge software to enable organizations to affect outcomes at speed. Yada, 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 goes into why it's so important. A quote from PwC: clients choose PwC to drive growth, transform, and create value, and that includes interventions with technologies. Our approach focuses on how Palantir software can add value to our clients' organizations holistically. With a business-led mindset, PwC helps to develop a practical and executionable strategy, creating greater value by going further, deeper, and faster with human-led tech-powered solutions. If you remember CodeStrap, I'm pretty sure all of you guys know him in the Palantir community. He left YouTube and social media to work at PwC. So he's a consultant at PwC, helping people implement Palantir AIP. And particularly, he's in insurance and he's dabbling in a little bit of life sciences with those clients to help them understand AIP. This alliance, all you need to know about why this update is important is it means it's going well and it means they're getting more customers. So they're not going to extend their alliance or like extend their collaboration or, you know, create more partnerships, whatever they're doing. If the I guess you could call it go-to-market strategy between both of them is not working effectively. It seems like it is. They also have this with Accenture, but we haven't heard from Accenture in like a year, a little bit more than a year. So maybe that one's not working out, right? The PwC one obviously is working out really well, and that's why we're getting more updates on it. And that's important because PwC is a very big consulting firm. They have thousands and thousands of clients. Those clients get recommended Palantir and then get an actual FDE to help them build the software, a forward deployed engineer. You're likely going to lock in more deals. So I think Q3, which is going to be in November, is actually really exciting. We're going to be gap profitable. We're going to have an NHS deal that's worth $600 million. We're going to probably beat on revenue. We're going to get from 558 to 560 million, which is a beat of like the 557 that we guided for. And we're going to be eligible for S&P 500 inclusion. The real number that I think would be amazing for shareholders is if customer count grows a little bit more than 10%. We got 31 customers or 38 customers last quarter. If we can get like 50 this quarter, that would be phenomenal. If AIP can scale to about 200 customers, even if they're not being monetized in the pipeline, but they're using AIP, that would be awesome. So I have some pretty high expectations for Q3. Those expectations have nothing to do with the stock, more have to do with the actual progress of the company. And I think Q3 is going to be well for Palantir. I don't think it's going to be too bad. And so if we have a good Q3, then, you know, hopefully we end out the year pretty well in Palantir as well. Persian Prince says PwC tries to get into everything and anything. This might cause some headaches for quality assurance. Yeah, I mean, look, the big thing right now is we need customer growth. And like, as long as we get customer growth, that is going to be the core thing that we need. Gary says, I'm from the UK and the NHS and government have spent millions to try to fix over 10 plus years the NHS. I've actually saw an article that said they spent 10 billion over the past 2 decades with IT infrastructure to fix the NHS. And all that 10 billion has went away. So if you think about it, 500 million to Palantir is really nothing if they actually fix the whole system. I mean, that would just be insane. You guys are saying screw Bieber and get Taylor Swift. Again, if you're just joining, I got the new iPhone 15 Pro Max. And it came with this wallpaper, and I just decided to, you know, roll with it. I was like, all right, that's fine. We'll deal with it. That's fine. All right, that's it. Let's get an update on markets, and then we'll move on to macro, specifically this 10-year yield and the relationship it has with our equity. So S&P 500 right now, 422.65. This is up right now. And actually, let me just pull this up. We might as well talk about this while we're doing this right now, the jobs report. Okay, so the reason the S&P 500 is up right now, and I'll get to the jobs report in a second, 422. Microsoft is up 0.44 in the pre-market. Tesla, 248 in the pre-market. Google, 0.78. DNA, Ginkgo Bioworks up 0.63%. They had their investor day yesterday, which was very interesting. They announced some interesting things. PayPal, $58. SoFi is announcing earnings on October 30th, a day before Halloween. So we'll see the SoFi earnings soon. I will be in Vegas when that happens. So hopefully when I wake up in Vegas, we have some good earnings on SoFi. Instacart is at $26.55. Nvidia, $437. Netflix, $378. And Cisco up 0.09%. The reason a lot of these stocks are up is really because of this one report. And I think if this one report was up, we would not really know. We would not really see a lot of green. Private payrolls have rose 89,000 in September. That means we added 89,000 jobs in the month of September. Well, Why does this matter? Because this is fundamentally below the expectation. So the ADP reported that private job growth totaled just 89,000 for the month, down from an upwardly revised 189,000 in August and below the 160,000 estimated by the Dow Jones. That's a big deal. I mean, the Dow Jones said we're going to get 160,000. The ADP assumed we would get 180,000. And we only got 89,000. Now, this is contrary to the JOLTS report yesterday, where we have 9.6 million jobs that are open, and we expected only 8.8 million to be open. So you got a lot more jobs that are for open, but we only added private payrolls, 89,000 jobs, and all of those exclusively came from services. So it's weird that the report comes a day after the Labor Department said job openings unexpectedly rose sharply in August. Now, the reason the S&P tanked yesterday when the JOLTS report came out is because if we have more job openings, that means we have more money going to the economy, more people have leverage to be able to get jobs, more wages have to increase, more money goes into the economy, more inflation. That's not good because we need interest rates to come down. If you have less actual jobs being added to the economy, like 89,000 when we expected double that, that means there's less money going into the economy. That means less inflation. That's good. Less jobs is good for the economy. So it's kind of weird, these reports coming at each other. Reading a little bit from the report, perhaps more importantly, the report provides some sign that a historically tight labor market could be loosening and giving the Federal Reserve some incentive to stop raising interest rates. ADP also said annual wage growth slowed to 5.9%, the 12th consecutive monthly decline, which is also really good because it's still above the inflation rate, but it does mean that the wage growth month over month is declining, and it's been declining for 12 months, which means it's not as competitive to pay for employees, which is good because employees don't also have that much money to put into the economy and spend, which hurts inflation. However, the ADP numbers can differ significantly from the government's official count, which comes on Friday. Economists estimate non-farm payrolls increased by 170,000, down from 187,000. So it'll be interesting to see what the government report is. I don't think it'll be that far off from the ADP report because the ADP report is not usually that contrary to the government. Job gains, according to Wednesday's report, came almost exclusively from services, which contributed 81,000 to the total. Of that, a total virtually all came from leisure and hospitality, which added 92,000. We're seeing a steepening decline in jobs this month, said Nella Richardson, chief economist at ADP. Now, if we go to the 10-year bond, and we take a look at that, yesterday night it got to 4.8%. Right now it's at 4.745. A couple of minutes ago it was at 4.75, so you could round up to 4.8. This is higher than it was at yesterday when it was at 4.72. So, you know, that 10-year is not slowing down. That 10-year is continuing to rise. And we need to find the bottom on equities when we find the top on the yield for the 10-year. But it doesn't seem like we found the top on the year for the 10-year. And the Republicans not giving us a Speaker of the House and potentially having this looming government shutdown that's going to happen. I mean, even if you hate McCarthy, at least he got a 45-day bill passed to keep funding the government. Because if the government was shut down right now, you might see that 10-year at 4.8, 4.9, like aggressively, just due to the confusion. And obviously the equity markets would be incredibly confused if the government wasn't operating. So, I mean, it's not a good thing. The jobs report is good, but the 10-year being at this high is definitely not a good thing as well. So we're going to have to see kind of where this comes out from. Morgan Stanley came out yesterday saying the jobs number on JOLTS. Really? Morgan Stanley said it's false? That means the government completely got the report wrong because that number came from the Bureau of Labor. Wow. Okay. I mean, look, I trust Morgan Stanley more than the Bureau of Labor, to be honest. Like if Morgan Stanley has a better report, June, if you have an article to that, please put it in the chat. I'll take a look at that. That would be really interesting. Okay, speaking of bonds, let's get into a little bit of analysis of what's going on with the bond yields, and then we'll get into some more macro.
Talk about the impact of those higher yields on the banking sector is Scott Seifers. He is senior bank analyst at Piper Sandler. And Scott, we had these huge concerns back in March when things really started picking up, when rates went higher. We've calmed down a bit. We thought things were better, but the rate picture continues to climb. Yields continue going up. What does that mean for the banks?
Yeah, good question, Becky, and thanks for having me. So, you know, if you can believe it, we're only about 15% up from those spring lows. So I think investors just have the sense that we're just sort of rolling from one concern to another. The latest concern is, of course, the impact of higher rates and how long they might stay here. So we tend to think about rate ramifications in four major buckets. So first is they simply exacerbate funding pressures. If somebody can get 5.5% on a 3-month treasury, it's tough to keep that money in a bank account earning less. So banks are going to be forced to continue to raise their own cost of funds just to keep and attract customers. And then, second, banks of course hold a lot of bonds. When rates go up, the value of those bonds declines, and banks are left holding paper losses. So for the most part, those should be transitory losses and not really matter. Fingers crossed. But the bonds that banks own are money good, so we just need to give them time to pull to par. But it's the kind of thing that hurts your liquidity and capital in the interim. So it's an unfortunate thing that investors have to deal with. The third thing is that higher rates exacerbate loan growth issues. We've known for some time that banks are pulling in the reins on loan supply as they work to build their capital. But with higher rates, there are of course fewer incentives to borrow because the cost to do so is higher. So now we've just got both supply and demand issues on the lending side. And then finally, the higher rates go, and the longer they stay there, the greater the risk that we enter a credit cycle. You simply can't raise rates by several hundred basis points this quickly and avoid causing some pain along the way. So
interest rates on credit cards are already at like 20%. So he's right about that credit tightening event that's kind of already happening. If the Fed raises again, I mean, it's like going to be guaranteed.
We're already seeing sort of what I would call discrete or one-off credit issues, but at some point there's just the fear that those persist a little more broadly than we've seen so far.
Would you steer people away from the financials at this point? Is there a section like the regionals that you're more concerned about?
Yeah, you bet. So that's a good question. I'd say for right now, the safer play has been to be in what I would call the universals, the larger names, and that looks like it'll continue to work. And in particular, when I say the universals, what I'm largely referring to is JP Morgan. It's just been an excellent name. It's got an excellent credit profile. Very, very conservative outlook, has the strongest in capital liquidity in the space. And of course, it's got the best profitability with which to continue to build capital throughout all this sort of turmoil. So it's just been an excellent place to hide. And I think as long as there's all this uncertainty, we're gonna stick with JP Morgan as sort of our go-to in the largest area.
Another place to hide, which I think a lot of people have been seeing, is the place to hide. You guys are talking about his eyebrows in the chat. Goodness gracious. Is big tech. So what he's saying right there, and the point he's trying to make is as the 10-year continues to rise and people want less risk on their return, where are they going to go? If they're not going to go to the 10-year, the money market fund, whatever, they're going to go to companies like Google. They're going to go to companies like JP Morgan, which even though there's obviously risk because they're a bank in this crisis, they're like the biggest bank in the world, right? They're going to go to companies potentially like Microsoft. So that's why Google, you see it's up. It was really unaffected yesterday. I mean, Google was one of the stocks out of all the stocks I had that was doing well yesterday. Microsoft also doing pretty well at 315 right now. These companies did not take the nosedive that a lot of traditional companies took yesterday. Obviously, SoFi got hammered yesterday. I think it was down 10%. It ended the day down 7%. I did buy some of the SoFi dip yesterday in my Roth. But SoFi at 740 is just insane. I mean, the stock was stuck from 850 to like 930 and at $10 for a good like month and a half before it had to collapse down here. And so it's going to have those aggressive declines. Same thing with Enphase. Enphase right now at 114.96. I mean, Enphase was stuck at 116 for a while. Now it's at 114. These types of companies are going to really get the hammer on them as interest rates go up or as the Fed, says a syllable. Whereas Google and Microsoft are going to be kind of safe. Even Tesla was pretty good yesterday. Tesla ranging from 245 to 250, doing well. It seems like big tech and bigger banks is going to be a hiding point for a lot of these institutional investors that just want to wait the rate cycle out. And also those companies might not be that affected by rate increases. Like people are going to still be searching, even if, the rates are higher in the context of Google. And so, that might not be the worst for them. Apple at 171 right now. Apple, not the big tech that people are hiding behind, just given some of the issues that are going on with China, even though iPhone demand is up. Some issues with Apple being one of the stocks to bet on. Actually, a lot of people that I have talked to that are just like using Apple as their hedge in terms of puts. So, and Jeremy, he even said on Finding Chunkies, he's using it as puts, which is going to be interesting to see where that ends up going for his portfolio over the next 10 months. Tim Cook dumped a bunch of shares. Really? Did Tim Cook sell? Tim Cook Insider. What did Tim Cook sell? I know he sold like a couple months ago. Did he sell recently? Did he sell? Yeah, look at that. There you go. Tim Cook dumped 240,000 shares yesterday. Wow. Interesting. I don't, I mean, 240,000 shares is not a lot for Tim Cook. I get it. But still, look at that. At 172, my guy made 41 million bucks yesterday. Yesterday. This is the file. Is this a scheduled sale? It might be a scheduled sale, which is okay, but like still. Is it? Well, he sold. Yeah, it's official. He sold. Look at that. 171, 171.42, 172.45, 270,000 shares. Damn. It's a lot of shares. $41 million. So he has 3.5 million shares left. That's what Cook has got. Well, I mean, and that's definitely not going to make investors, happy to kind of continue dealing with what they're seeing right now. Floodbugger, I see your post right now. In a Form 4 filing with the SEC late Tuesday, Apple CEO Tim Cook disclosed selling 511,000 common shares. Of the shares, 270,000 were used for taxes. Okay, so he sold $88 million worth of Apple, and 41 million, obviously, he had to pay for taxes. So 270,000 shares were for taxes. Damn. You sold 500,000 shares, and half of it, 41 million, went straight to taxes. That's crazy, bro. Could you imagine? $41 million you have to pay in taxes. That's just like, goodness, insane. Oh my God, that's a lot of money. That's a lot of money. Quick little 41 million. Oh boy. Well, nonetheless, so again, Apple's probably not one of those stocks people are going to be running to for safety. But this 10-year yield is definitely a little bit harder to stomach than a lot of us, I think, were expecting. Let's get some coverage on the S&P 500. We have still not hit the 500-day moving average. This analyst believes that we need to hit the 200-day moving average before we see a move going higher. So that would be hitting 420 officially before coming up.
Ahead, we're mentioning, the rising bond yields, the long bond almost at 5%, the 10-year at 4.8%. What are you expecting today?
Yeah, well, I think it's all about yield. So really what we're looking for to see some stability. The other thing for the market, we're approaching that 200-day moving average on the S&P. We're at 42.29 on the S&P. That 200-day moving average is around 4,200. So really what you're looking for is just to see if we have a little bit of a movement from fear to a little bit of greed, that people are looking at this pullback for some opportunities.
So you're saying if we go from fear to greed, does that mean you see this potentially as a buying opportunity? And if so, are there certain sectors you would buy in right now?
Yeah, the way we're thinking about this, Frank, we've been more, at least since end of July, we've been expecting more of a correction in price and time, and we've gotten both of that. I don't know that we've seen the low yet. I mean, in some ways, I'd actually like us to crack below that 200-day moving average to get a lot more fear. But the good news is we would be leaning in. And if you underweight equities relative to long-term targets, what we wrote last night is that we would lean in and look at this as an opportunity, because you've seen prices pull back pretty good. And more specific to your question, as far as where we would focus, two sectors I would highlight would be communication services. We've had a nice move back there, where a lot of AI plays, and also the energy sector as well.
All right, so that's what you wrote last night. Let's look ahead to the day today, again, with the futures for the Dow just moving into positive territory. The S&P kind of flat, but just slightly higher right now. With all that in mind, what is your WEX word of the day?
All right, Frank, the word of the day today is reset. We've had a really large reset across this markets, as far as it's all about the 10-year. So 10-year has moved up very quickly, and because of that, risk-free rate has moved up and reset higher. We've seen a broad-based reset across markets. We can look at the S&P being down about 8%, but small caps are down 15. The average stock is down double digits. Utilities and real estate are down 20. So we've seen a pretty good reset. And the other thing I will say, the reason why we're starting to get actually a bit more positive on a short-term basis is the percent of stocks in the S&P 500 is now the most oversold since last fall, after being very overbought in July.
All right, so Keith, you gave us a sense of what you would buy into. Are there certain sectors you would just completely stay away from?
Well, we would still stay away from the real estate sector, as an example. Even though it's down 20%, we've been underweight all year. We think that's really interest rate sensitive. And even with small caps, we like small caps longer term, but they have a lot more floating rate debt. So these higher rates for longer impact them. So we would really continue to focus on the larger cap part of the market, and some of the sectors I mentioned before, like energy and communications, where we see better relative value and momentum.
All right.
I think his view is also similar with a lot of analysts that are thinking small caps are the place to be, given the S&P has traded off pretty significantly, especially if it wicks under that 200-day moving average. Again, if you take out the 7 companies that made up the majority of the gains this year, up 10% year to date, the S&P is trading at a 16 times forward earnings versus 21, which is a lot more reasonable given 18 is the average that it tends to trade off at. And so today's going to be one of those interesting days where we see where the market decides to go based on the 10-year going higher, based on this new jobs report, and based on if we decide to hit that 4,200 level or if we continue going further. I want to transition now. We had about 14 minutes until the market open. Here's an interesting story that went into effect yesterday, and it has to do with Meta. Okay, good old Zucks. So this is what Canadians are seeing on Instagram. This is Bloomberg's Instagram account in Canada. Okay, here's the caption below. In response to the Canadian government legislation, news content cannot be viewed in Canada. This is what you get if you're on Instagram and you pull up Bloomberg, the Wall Street Journal, whatever it may be. So Facebook has officially censored news by removing it for 40 million people in Canada because legislation in Canada insists that if Facebook and Google do not kind of change their news policies, then they're not going to be able to cooperate with the country's laws. This is pretty ridiculous. This is not good for the Canadian government. This is not good for the Canadian citizen. I wanted to pull this up. First of all, if anyone in the chat is experiencing this, if you're in Canada. Second of all, this also might not be the best for Facebook's revenues. I mean, I don't think Canada's like the biggest market for Facebook. It's definitely a huge market, definitely a high average revenue per user there. But if you're in Canada and you use Instagram to consume news, forget just business news, any type of news, you can't consume it because it's blocked, which means you're less likely to use the platform, less likely to scroll through ads, all that stuff. So this is not a good thing necessarily for Facebook, the company. Obviously, the money they would have to pay the Canadian government would be way more than the money they would be making off advertising revenue. So they decided to do this as like a moral stance against the legislation, which I think will eventually reverse itself. I think it has to. But your boy Trudeau, for those that are in Canada, what is he smoking? Like, legitimately, can someone tell me why is he doing this? Like, does this guy just like not like you guys or something? Like, why is he not letting you see the news? I mean, I don't know, man. And there's a lot of Indians that live in Canada. A lot of my people love the Canada. And I can't imagine living there, bro. The guy's not letting me see my news. Like, come on now. That's a little weird. It's a little weird. Canada becoming communist. Well, they're not communist, but this definitely feels like some communist shit. That a private company can't just show the news because you're forcing down legislation down their throat. They're just like, all right, forget you guys. We got 3 billion other people that care about the news. You don't have to care about it. Boom. That's it. Tough luck for Canada. Oh yeah, ask a trucker. I forgot about that situation. That was not a good situation for you guys either. That was a tough situation. They want news controlled by the government. Yeah, and that's sad. We were talking about it on Finance Junkies yesterday. Like, you cannot censor media, bro. I don't care if Fox News is manipulating or CNN is manipulating. People have to have freedom of expression, and then people have to have freedom of consumption. If you don't like Fox News, don't watch it. If you don't like this YouTube channel, don't like, you know what I'm saying? Like, everyone has their own interpretation of media, but you don't censor media. And if media gets really powerful and really big, all right, that media is definitely going to have more influence. Fox News influences a lot of people. Guess what? They spend a lot of money to build a media company. And if you want to go against it, you have to build a counter media company. You don't shut Fox News down, even if you disagree with them. And so it seems like that's what Canada's trying to do. They're trying to shut down certain news sources from Facebook, given that they don't agree with it or they want certain, fees for showing the news. At the end of the day, Facebook controls the traffic. Canada did nothing but create a country where people live in it. You have to have products and services that actually allow those people to live meaningful lives. And if Facebook's bringing all the traffic to the news source, should be really grateful that they have all this traffic. And to have to pay them for that is a bit ridiculous. Because guess what? If you don't want to give Facebook your news, there's 17 billion other little websites and individual people that will give their content to get that mainstream distribution if, you don't want to be the one that's on top of the news. So the idea that you have to pay Facebook for distribution when they're giving you everything and all you have to do is give the content is pretty insane. And so that entire legislation to me makes no sense at all. Amit, please come tell Trudeau this. Please help us. Trudeau is an interesting guy, bro. He's an interesting guy. I know there's some people in Canada who love this guy. Like you guys voted for him twice, right? And there's other people in Canada that hate this guy. And so I don't really know about you. I mean, you guys keep voting for him, so it seems like you like him. But it's weird because a lot of people also seem to not like him as well. Let's get an update on private payrolls. Here's the report we got right now. Again, 89,000 jobs. Let's take a look at this for a couple minutes, and then we'll get into the market.
3 seconds for the ADP Jobs report from Lease Maniacs. He's here.
Yeah, thanks, Joe. ADP saying the private sector grew by 89,000 jobs in the month of September. That is a miss compared to the stronger estimate of 160,000. The goods sector up by 8,000, the service sector up by 81,000. All of this compares with a non-farm payroll estimate for Friday, which includes government and the private sector, of 170,000. Looking at the job growth by business size, small businesses doing their part, medium businesses doing their part, up by 79,000. It was large businesses that saw the decline, down by 83,000. That's a big change from what's been going on here. And by sector, there it is, the leisure and hospitality business doing its part, up 92,000. Financial activity is also stronger. Kind of curious given what's happening in the mortgage market. Construction also doing well, but trade, transportation, and utilities down 13,000, and professional business services down by 32,000 right there. Wage gains also showing quite a bit of moderation. Those staying in their jobs got year-over-year changes of 5.9%. That's one of the lowest we see since 2021. Job changers, 9%, still high by the historical series here, but down quite a bit from, it was, I think, 14, 15% just about a year ago. So some good.
All right, so nothing too different from what we saw in the previous report. Again, the big headlines for those that are here: 89,000 new jobs. We expected 180,000, which is really bullish for markets. Less jobs, less money, less inflation. I think that's why we're green right now. And 12-month consecutive wage decline, now at 5.9%, which is also really good for markets in terms of inflation going down. Let's do one last quick story before we get into the actual market open and get a little bit of coverage on what's going on with Kevin McCarthy. So for those that are not in the United States, we have two parts of Congress. It's the House and the Senate. Both of them need to agree on a piece of legislation before the president can officially sign off on that. The House has a Speaker of the House that represents it. Two parties, Republicans, Democrats. Republicans have the majority in the House, but by a slight sort of margin, they get to pick their House Majority Leader. That guy, who is called Kevin McCarthy, was ousted yesterday internally by the Republican Party with some help of the Democrats, and it's just chaos because until we have a Speaker of the House, we definitely can't get a funding bill. So let's get a little update on that. And if we don't get a funding bill for the United States, the entire world economy will collapse, sadly.
2024 presidential candidate Chris Christie. He's a two-term governor of New Jersey and a former U.S. attorney. Good to see you, Governor.
Good to be here, guys.
Always good to see you. How's wife? She's good?
She's great. She's watching. I'm confident.
I'm
It's her
confident.
favorite show. She watches every morning.
God bless that.
Every morning.
Can you give me anything positive, any silver lining of that?
Bro, was he singing? Did you hear that? Hold on. Let's replay this again. Hold on.
Morning.
God bless that.
Every morning.
Can you give me
Yo. That's not just me, right? I love Joe. I sometimes I hate him, but I love this guy.
anything positive?
We gotta hear it one more time.
She
She
watches
watches every
all the
morning.
time.
God bless that.
Every morning.
Can you give me anything positive, any silver lining of that excrement show
No.
from yesterday?
Oh my
No, I
gosh.
can't. But, look, it just shows, it gives people more of a concern about our party being a governing party. And that's bad for all of us who are running for
Well-founded.
president right now, right? And look, Kevin's mistake right in the beginning was taking the job under those circumstances.
The only way to get it.
I said to him at the time, you should tell them, go find somebody else. Because there would have been no one else who could have gotten
Chris, it
218.
was always one person. It was always one person. But usually you had a margin of 30 or 40 in your party.
Well, we can thank
And
Donald Trump for that.
That's what. So trace it back to that.
Of course.
It wasn't the one person thing. It was that there were only.
No,
It was the margin was because there was no red wave
No.
because all the MAGA candidates,
And
extreme MAGA.
You heard from Matt Rosendale,
Another one.
who said he was praying
Right.
for them not to get a big majority so that he could be more influential. I mean, so you got these guys who yesterday were literally just trying to raise money for themselves, get on TV. That's all they care about. And by the way, the creator of all of this is Trump.
Right.
I mean, he set this type of politics in
Started with
motion.
Purdue in Georgia and said,
all right, so let's get into the markets, but to speak a little bit on that, this is some really weird stuff. This is, by the way, for those that kind of don't understand the significance of this is historic. I don't think we've had a Speaker of the House ousted. Either it's ever or it's been in like 100 years, is what I was reading last night. It's been a very long time since the Speaker of the House gets ousted, because the Speaker of the House drives the policy sort of coordination and ultimately agenda for the party. And they're the ones that have to do the negotiating. They're the one they have to whip the votes. They're the one that have to negotiate with the other party. Like, they're the guy or gal. For the Democrats, it was Nancy Pelosi who was Speaker of the House when they controlled the House of Representatives. So to oust them means that your party just doesn't like them. Remember, Kevin McCarthy went through 15 rounds of voting. And there's like 400 people that vote. So they were up until like 3 a.m. at night doing rounds and rounds of voting to get him to be Speaker of the House. And then finally on the 15th round, someone decided to, like, all right, we'll vote for him. And so it was really easy to get rid of him. It took one round of votes and be like, you know what, we don't want him anymore. But the problem is, who's going to be the next one? Who's going to be the next guy who's actually going to get the job done and can actually do it in a way that can negotiate with Democrats to get a deal passed? The reason this affects you if you're an investor is because in the next 24 hours, we need a new Speaker of the House. If that Speaker of the House is not someone who can negotiate and communicate effectively with the Democrats, it is very likely we are going to get into a government shutdown by the end of November, which sucks because December is when you're supposed to see, a lot of momentum in the stock market. And the reason we would be getting into that shutdown is because the Democrats want more aid for Ukraine. The Republicans want spending cuts. The Democrats don't want any spending cuts. And the Republicans want border control. None of those things are compatible with each other. I mean, you would have to do some really strong negotiating to get those to kind of be compatible with each other. I'm sure there is a way, but it takes a lot of work. And whoever they pick as the Speaker of the House, I don't know if they're going to be able to get the job done. So it's an ongoing saga in American politics, and I guess we'll see where it ends up going from there. A Mitt for Speaker. Could you imagine if I was the Speaker? Someone said, by the way, the Speaker does not have to be in Congress. So people were saying, what if they vote Donald Trump as Speaker of the House? The Speaker could be an average citizen. It does not have to be someone in Congress. So they could, if they all came together and wanted to vote for Trump as Speaker, that could theoretically happen. I don't know if that would happen, but it could be anyone. Peter, thank you for the $5 super chat. I appreciate it. If you are just joining, Palantir is likely getting the NHS deal. If you go to the 5-minute mark of the market open after, or you can do it right now. We talk about that for about 10 minutes. Palantir getting the $580 million deal, not officially confirmed, but sources told Bloomberg, which is one of the most reputable kind of news sources, that look, it's happening. And so that's likely going to happen in the next couple of days, or at least in the next week when they announce it. And we got a Palantir PWC extension on their strategic collaboration to bring AIP to clients, which is going to be really good for Palantir's AIP customer growth. Right now in the pre-markets, we got about 30 seconds to the market opens. 422 on the S&P 500, NASDAQ at 13,096, TFC at 2727 in the pre-markets, Enphase at 115. We will see if today's rising 10-year but decent jobs report has any impact on the market stabilizing a little bit from the levels it was at yesterday, where obviously we saw a massive decline, where we got a bad jobs report and we got a 10-year hitting its highest levels since 2007. So let's see what we've got going for us right now. It is October 4th. The stock market is officially open. Wake your ass up. Here we go. Let's get into the stock market. S&P 500, 422, up 0.16%. Again, $2 away from that 200-day moving average at 4,200. Not getting there yet, but we'll see if we get there. Coinbase, 73.10, up 0.86%. Snowflake, 150, up 1.2%. TFC took a nosedive yesterday at 26.95, now at 27.33, up 0.51%. So not too bad on TFC and the regionals writ large. And Novix, this stock was hammered yesterday, down 10%, down another 3.3% today, $9.96. The layoffs yesterday and some of the other news led it to go down. Not really sure about a Novix long-term. Maybe it's good, maybe it's not. But if you do want a DCA, I guess this is a juicy dip. The question is, in a rising interest rate environment, can the dip get even worse for a Novix? Enphase at 114.68. So Enphase now setting into a new normal of around 114. 120 used to be the new normal. Now we're $6 down at 114. If Q4 guidance is bad, Enphase is going below 100. And so we talked about that yesterday. Either you trust that Q4 guidance will be okay, and this is the dip you want, or you think Q4 guidance will suck because of solar. Interest rates will continue to remain high, and it's just not going to be a fun story going into December. Google 133.33 up 0.69%. Tesla 249 up 1%. Snapchat 859 up 0.59%. SoFi earnings on October 30th. We will get earnings for SoFi $7.38 up 1.3%. Elf Beauty 99.56 up 0.45%. Palantir 3% up on the day, $15.33. Not bad. Obviously, the NHS contract is likely leading to the more speculation for Palantir to be up. Again, the contract itself, $600 million annualized over 5 years, is not going to be a crazy unique thing for top line revenue, but getting this deal reverses a lot of the stereotypes around Palantir and sets us up to get future deals, which is why it's going to be really important for Palantir. Palantir right now at $15.33, not bad at all, up 3% on the day. We got PayPal at $58.36, Rivian at $21.88, NASDAQ 13,109. So NASDAQ, not bad. Kelly says, in a past life, Amit was an auctioneer. That's hilarious. 13,113 on NASDAQ, SLG 3526, MicroStrategy 312.40, up 0.35%. Wouldn't it be so funny if people auction stocks, like there was an auctioneer for stocks, and you'd be like, all right, I got Disney at 79.73. Who wants Disney? 79.73 up 0.21%. Who has sold to this person from Canada? Who wants it? You know, it'd be just so funny. But instead we have like Robinhood and Webull and Schwab and all that stuff. Disney actually below $80, $79.73. Disney committing I think about $10 billion to their parks business. Yeah, I've never been excited about Disney. Again, for me, Disney, the content sucks. I did pull up Halloween Town the other day because I was in the Halloween spirit, and I watched like 5 minutes of a classic 1998 Disney film. But outside of that, I'm just never going to Disney Plus, bro. It's so hard for me to turn that on. So for me, for my own from using a Peter Lynch-esque philosophy, I just can't invest in Disney because I just don't use their products. Nike at 95.70, Amazon 126. We have an update on the FTC probe. We're going to get into that in a little bit. Apparently, the FTC found a unique algorithm Amazon is using to track the pricing strategy, which I don't know if that's that big of a deal because, of course, they're going to have some type of algorithm. They're not going to have a guy just sit there trying to try different prices for products. So that is like their latest development and why Amazon is the worst company in the world. ARK Innovation at 38.22. Kathy's not been doing that much buying over the past week. After she bought 1 million shares of Palantir, she's kind of cooled down and she hasn't been doing that much buying. So we haven't seen that many updates from her, but ARK Innovation right now at 38.23. Meta $300. JP Morgan Big Bank up at 142. Zoom at 68. Roku at 69 bucks. Robinhood 953. I did get a little bit more Robinhood yesterday as well. KRE Regional Banking Firm at 40. Zion's at 33 and KeyBank at 1024. Let me know if you bought stocks yesterday, because yesterday I do think was a day to buy. Today is probably not going to be as good of a price as yesterday. I mean, we'll see. We're only 4 minutes into the market open. We'll see in the next 30 minutes what happens. But yesterday was definitely a great day to buy, in my opinion. I bought some Robinhood. I bought some SoFi. And I bought a little bit more TFC as well. So those were the three things I bought. I didn't buy a ton, but I did engage in buying because, I mean, look, stocks were down pretty badly. And everyone that I know, I'm in a group chat with a couple of other people. They were deploying a lot of their cash because they were like, look, today they sent me a screenshot of their portfolio. Every stock was red. He was like, all right, today's the day. I'm letting go of a lot of money. So let me know if you bought any stocks yesterday and what stocks did you buy. Palantir at $15.34, up 2.8%. NASDAQ 13,126, up 66 points on the day. And Google continuing to do well, 134. It seems like investors are going under Google to get a little bit of safety from a lot of the madness we're seeing in the market. I bought shares yesterday. I bought a lot of my Roth. My Roth bought a lot of shares, to be honest. Enovix and TFC. Interesting. Regionals and a battery play. Not bad. Not a nice little combination. I always love when people say the stocks they buy. I think of them as like music playlists. And I think there's like such a big opportunity for like an app that could like make your stocks into playlists. Honestly, I think Robinhood could just add this as a feature, like a Spotify playlist of songs. Like like my iPhone 15 Pro Max that just came in yesterday. It would like the Justin Bieber playlist I have for music. If I could do that for stocks, that'd be pretty cool. Even though Robinhood does let you do that. Like I have my fintech stocks, my other stocks, my AI stocks, but they're not as social. If they allowed you to like share those with friends and stuff, that would be pretty cool. Kelly says she bought Amazon, SoFi, and Robinhood. Anthony says, I bought everything. Big whale we got in the chat. John says they bought Enphase, SoFi, and Enovix. Sankofa Holdings, I bought Stone, Palantir, Nubank, and PAC-B yesterday. Not bad. That's not too bad. CRISPR and Palantir. Bayray says Amit knows what shares are. So-called bought SoFi. Crossroads, and my son bought SoFi. It's now his largest position. Not bad at all. That's really good. I will keep buying PayPal. I think a lot of people on Twitter yesterday also indulged in a little bit more PayPal. Okay, let's get into the Amazon story. I want to pull this up. Apparently, again, they found some new thing that Amazon is doing, and that's going to make their against them a little bit better. I don't know if that necessarily makes the case better, but let's see what they have to say. Amazon's been giving some juicy prices, even with this FTC lawsuit, and so we'll see if they can get out of it, and if there's a sharp rebound back to that 140 level that they got to after earnings. People forget how great their earnings were because of this lawsuit, but we'll see if they can get back there.
Amazon used an algorithm to test how much it could raise prices in a way that its competitors would follow. That's according to some redacted documents from the FTC's antitrust suit against Amazon. The algorithm was codenamed Project Nessie. The complaint says the algorithm raised the prices on certain items and monitored competitors to see if they raised prices to Amazon's level. If they didn't, it returned the item to its normal price point. A source telling the Wall Street Journal that Amazon made more than $1 billion in revenue through use of the algorithm. An Amazon spokesperson says the FTC's allegations grossly mischaracterize the tool, calling it a project to try to stop Amazon's price matching from resulting in unusual outcomes where prices became so low that they were unsustainable. The company says the project ran for a few years on a subset of products, but didn't work as intended and was scrapped several years ago.
What this means in layman's terms, if a private person selling a water bottle for $12, Amazon will sell it for $11. And then they're going to see via this algorithm if that person reduces their price to like $10.99. And if they do, Amazon will reduce it to $10.98. And they'll see if that person goes to $10.97. It'll be this back and forth game until we figure out what is the perfect price for that water bottle that Amazon could basically, steal margin on. And obviously not the best for sellers, but nonetheless, it's Amazon's company and they're trying to get the best price for the consumer. All this stuff is definitely harmful to sellers. The problem is it doesn't harm the consumer, which is why the FTC lawsuit is BS. Because if it doesn't harm the consumer, I don't know how you have a case at that point.
Part of this whole debate is whether Amazon basically is forcing third parties to match their prices. And because they're forcing them to match their
which is good for the consumer.
Prices, what that does to the prices at all the other retailers, and therefore how they track all of that. So the good news is that if you're on Amazon, you might actually be getting the lower price. But is it really the lower price if they're jacking the price on all of the other sites to create the lower price? And
yes, because if you're on Amazon, it's the lower price. That's it. Case closed. I mean, like the FTC is going to have a hard time arguing that that's bad for the consumer.
I would say the idea that Amazon's able to have the lowest price and the others are and third parties are willing to have higher prices elsewhere suggests Amazon has a unique market power. Because
okay, I'm sorry. We got to interrupt the Amazon stuff because as interesting as that is and as cool as that is, we've got little old Palantir exploding right now, up 5%, 15.75 right now. You got Palantir. It was at 15.85 just a couple of seconds ago. Palantir up 5% on the day. Not bad at all. 1578, 1575 we're seeing right now. The reason this is likely happening is because of that NHS deal and further speculation on that NHS deal. It seems more likely than not that we are snagging this deal, and maybe the market is starting to recognize a little bit of the importance about why we are ultimately getting this deal. Not bad at all. Palantir up 5% right now. And let's take a look at Amazon stock while we're here. We'll get back to that video in a second. 126.68 up 1.53%. Again, that algorithm, as controversial as it may be, it's just not stopping the consumer from experiencing a good experience. And if that's the case, then that's not going to be happening. S&P 500 at 423 right now. So we're breaking a little bit higher from that 200-day moving average at 420, breaking away from that. Palantir 1564 up 4.8%. We're probably going to see some profit taking in this area, given it's up 5% on the day. But it also might pile into a little bit of momentum as well. Amazon now at 126. All right, let's get back to that video and let's finish off what he was trying to say.
Want to be at Amazon over all of the other places. It's actually,
That's
I will say,
convoluted argument.
I would say on that front,
it's
one of
than what Walmart or anybody else.
It's one of the, I don't know. I think it's a unique argument, but it's actually, to me, and it is one of the few demonstrations of the power that Amazon appears to have, which is that third parties are willing and happy or happier to have their stuff on Amazon at a lower price than they are anywhere else. And that is...
It's a market you don't want to miss. I think that's a clear argument, but you would say the same for Walmart? Or lots of
no, because that's
Target at different
but that's the... Well, but the point is that if you're willing to have a higher price on Walmart.com or in Target.com so that you can be on Amazon, it means that Amazon actually does have the power.
No, I just mean in the stores. Like in a Walmart store, they've always talked about everyday low prices, and they have been pretty brutal on their suppliers to say, you are going to have the lowest prices with us. We're going to make sure, because they can deal, because they're so big, they can deal with a much thinner margin than other retailers can.
In store.
In store.
Right.
Yeah, again, all of that helps the consumer. The reason why Walmart can sell stuff at a loss, Amazon can sell stuff at a loss, is because it helps the consumer, and the consumer is the only thing the FTC has to care about. So I don't know, man. I mean, like, I think it's going to be a tough thing for them to argue this deal in court and try to get them to go away. But I don't know if that's, if it's actually going to be able to be possible. Surely Amazon offers the most eyes on your product. Yeah, they also give the traffic. If the Amazon's giving the traffic, then you can't really argue that Amazon's the big bad boy in the house. All right, I want to transition to a story on interest rates. We have mortgage rates getting up to 8%. This is a piece that was out in the Wall Street Journal this morning. Let me know in the chat if you are trying to buy a house or willing to purchase a house, or you're in the market for a house. This is an argument for why 8% mortgage rates aren't really crazy. With fewer buyers for mortgage bonds, the rates on home loans can go unusually high. And that's kind of what we're seeing right now. If you look at this chart right here, this is the 30-year fixed mortgage versus the mortgage bond and treasury yields. It's pretty high. As you can see, treasury is in that 4.5-ish%, mortgage bonds at that 6% area, and then mortgages approaching 7.5, eventually 8.1%, which is just insane. The fact that we're willing to pay this much for mortgages, and the fact that houses are being sold every day. Like, if my parents listed their house this morning, I like within the next couple hours, we would have people ready to buy the house at an 8% mortgage rate. It's just insane. And so eventually you think this would have to collapse. But if it doesn't, if it just keeps going, then there might be a way for this to continue to keep going further. The article says, on top of that, there's a profit earned by mortgage originators who make the loans and then sell them into the market. The end result is that the typical 30-year fixed rate on new conforming mortgages at more than 7.4% at the end of September have jumped far ahead of the 10-year treasury, giving you just 4.6%. This nearly 3% percentage point gap between 7.4 and 4.6 is big. The pandemic average from 2017 to 2019 was under 2 points. It has narrowed slightly from earlier this year when mortgage bond portfolios, distressed banks were being sold off. Still, that raises the possibility that even without more failures, banks moving to just trim their portfolios to raise cash could help keep that gap about where it is, effectively turning just a 5% 10-year treasury yield into an 8% mortgage rate. So the article goes in a little bit more deeper into what would it be like for banks to kind of swap the 10-year bonds they have with mortgage bonds, and how could they offload some of the losses they have on their balance sheets, in particular with loans, because interest rates going higher when you mark to market those loans, they're obviously underwater. Could they swap some of those for mortgage bonds and kind of make a little bit of a profit on that 3% spread that exists? Which is why for the banking sector, mortgage rates might actually not be as bad as for the average consumer. Paying 8% is, not the best thing in the world. Laura says, my first house was 8% in 2001. Wow. That's insane, bro. Maybe 8% is a norm. Maybe it's not as crazy. I mean, maybe that 3% that my parents got on this house was the anomaly, and 8%, 7%, 6% is not that insane. Smitty says 8% is sustainable if the home values come way down. And the problem is home values are not coming down at all. I mean, like, if you just look at Zillow, if you look at your property, it's probably up a couple $100,000 from 2 years ago. So that's the other interesting part of the dynamic. Erwin says, I've been in Boulder where average home price is 1.1 million. Love to buy, but can't even get a loan as a 26-year-old for that. Yeah, it's tough, man. In 2008, the 24, 25, 26-year-olds were coming into a pretty tough job market. Right now, the job market is great, but the housing market for the 25 to 26-year-olds like us is just not that good. I mean, I was thinking of getting an investment property next year and putting a down payment on that, and starting at least having some real estate in my portfolio. And I don't know where the market's going to be next year, and if it's even possible to reasonably decide to put a down payment and keep it going from there. But it's going to be tough. Paul says, did you discuss the PWC news? Yes, at 9 minutes and 40 seconds, we discussed the PWC news, and I know that because I have the timestamp on my notes. So 9 minutes and 40 seconds, we discussed that a little bit more. My real estate agent house was 15% when they bought a house, but prices of goods was different in cost of living. Yeah, I mean, it can get pretty high, but if the cost of living is a lot less, then, you know, you can justify and kind of bounce it out a little bit more. All right, let's get an update on the SBF trial that is currently going underway. We are in day 2 of jury selection. Let's get a look at what's going on and who's being decided for SBF's historic trial. Did you see Dumb Money? I did not see Dumb Money yet. I got to find a couple free hours to go to the theaters. I want to watch it because I would love to watch that movie. I haven't. Maybe I'll hit up one of my side chicks and I'll take her to the movies this weekend.
Fraud trial of former FTX CEO Sam Bankman-Fried. It did begin yesterday with jury selection kicking off several weeks of proceedings to determine if he's guilty of misusing billions of dollars of customer funds or not. Joining us right now is John Stark, former chief of the SEC Office of Internet Enforcement, a senior lecturing fellow at Duke. Okay, I'm going to make you, for the day, the defense attorney, John, for Sam Bankman-Fried. What would you tell? What would you tell the jury?
That's a real problem, Andrew. I would have pled the case a long time ago. This is first of all, he wants to claim some kind of reliance on counsel defense, which is a very tough affirmative defense to do, because if you want to say your lawyers told you all of this was okay, you need to have evidence that showed you it's okay to steal $8 billion from my company or another company. It's perfectly fine. You need that kind of information. And secondly, you're going to have to waive the attorney-client privilege so your lawyers can get up there and say whatever they're answer, whatever they're asked. This is an unprecedented trial here. Let's just take a look at the evidence that we have. We have 3 witnesses, right? All of them are former senior executives at the company, and they've spent the last 11 months walking the prosecution through every single document, every email, every text. Why have they been doing that? Because they signed plea agreements. These are not people who were granted immunity. They have a stake in this trial. They have to perform or they're not going to get
right. But John, unto itself, see, if I was the defense attorney, what you just said actually would be probably my best defense, which is I'd say, you can't believe these people. How can you believe the credibility of these individuals if, in fact, they've all taken plea deals and they all have a stake in the outcome of this case because their stake is my stake?
That's the truth. That happens in every single trial. Okay, I was at the SEC Enforcement Division for almost 20 years, worked on lots and lots of cases. Every single case had a criminal proceeding. Every witness has a bias. You walk them through that, and they explain how they're here to tell the truth, and they explain document by document. Remember, you have a legion of accountants, of forensic accountants, of lawyers, of technologists, all hired by John Ray. John Ray has paid them over $200 million. They're making $1.5 million a day. And do you know what their primary job is? It's to give law enforcement everything they ask for. They are on speed dial from these prosecutors. The prosecutors can call them anytime and say, come on over, talk to us. They're charging somewhere in the average of $1,800 an hour. They're running over to that office, giving them every single document, every single text, every single email, everything they find, and it's free of charge for the prosecutors. This is unprecedented to have so many prosecution witnesses that have walked you through everything and to have access to every piece of data. And what's his defense? You know, he's his own worst enemy. I mean, he's got diarrhea of the mouth. Always. You look up his text. He talks about the dumb game that we woke Westerners play, where we say all the right shibboleths, and so everyone likes us. He admitted in a text that the ethics stuff was mostly a front. He spent his time talking to you with giving you all sorts of inculpatory evidence. He just can't help himself. So he's his own worst enemy.
John, just running through what it looks like some of his defense may be when they started asking questions of the jury, like, oh, do you know anyone with ADHD? I mean, if ADHD is an excuse, that's like a third or a half of the population gets to get off on things like this. And if you're blaming your lawyers, his parents are Stanford law professors. The idea that you got bad legal advice, I mean.
Oh, crazy. Don't get me started on the parents. You know, the father gets a $10 million salary, says, hey, my $200,000 salary is not enough. I want 10 million. They get a $16.5 million house. Now, all of a sudden they're saying, well, we didn't know when we signed the papers to that house. You know, my father used to use this statement when my brother and I would get into trouble. The I don't know syndrome. You tell you, gee, I don't know how the car got all messed up. Yeah, I was using it last night. You can't claim you're a Stanford law professor. You're all celebrated. You know, it's ridiculous to claim all of a sudden you're the biggest idiot in the world.
I agree. Look, man, your parents, his parents are too smart and too rich to claim that they're crazy to go the asylum route. So, I mean, it's going to be really interesting. It's going to be really interesting how this case unfolds. Obviously, they got to get the right jury. But if they end up getting a healthy jury, it seems like the evidence is not in his favor. That's a lot of money from customers that were lost. And for them, you'd want to see a little bit of justice there. All right, we're going to end it off on two things. Number one, Karp did a new interview yesterday for about 40 minutes talking about healthcare. Here's a clip Arnie got out of them where he talks about the Palantir community. Let's see what he had to say.
You know, for reasons that don't always make sense, I have millions and millions of people that follow me in Palantir. And a lot of them are being served by you. And these followers of Palantir, they invest in us. They run around the country saying, "Well, you're not using Palantir? Are you crazy?"
It seems like he knows that there's a pretty big Palantir community out there. Man, I wish he was on Twitter, bro. If Karp was on Twitter, even if someone else controlled it and just like said the same political tweets every day about just like we need to fight for liberty and democracy and all this stuff, like, dude, the amount of engagement Karp would get. Like the amount of people that would follow him would just be insane. I mean, like, I think Palantir should seriously consider that would be a huge asset for marketing just to have a Twitter account for him. So that was really awesome by Karp acknowledging kind of the Palantir community and that he does definitely have followers. Last thing we'll do, word of the day to end out this day. Real quick before we get to word of the day, let me just quickly check on the S&P. 422 on the S&P, Palantir at 1550, up 4% of the day. Not bad. NASDAQ 13,120. Got a green market, some pockets of red. Regionals are red. Banks are red. We expect that. FinTech is red. But we do have tech being a little bit more green. So we're just going to have to end up seeing how this 10-year plays out in regards to its yield for us to ultimately figure out where equities will capitulate and eventually how we can move forward. Word of the day, horripilation.
Horripilation. Horripilation.
A bristling of the hair on the skin from cold or fear. Goosebumps. Okay, so basically whenever J-Pow speaks, I get a horripilation. That's what's happening. The chilling horror movie gave me such a fight that I felt horripilation ripple through my entire body. The eerie silence and dark atmosphere of the abandoned house sent waves of horripilation down her arms and legs. I'm not going to lie. When I used to look at my portfolio and it was down a lot of money, I would feel horripilation. Now it's just like, all right, whatever. Like how much more can you beat me up? Eventually it'll come back. Hopefully it does. And now the horripilation is kind of just natural. It's become second nature. And as long as, we don't die, we'll see these equities eventually come back and it'll be all right. But horripilation, goosebumps. That is definitely a better word for goosebumps than I've ever heard. Horripilation. So if I ever want to say I'm feeling scared or something, I'll be like, man, I'm just feeling a horripilation right now. And the person next to me is going to be like, I hate that you're saying these big words, but it'll be funny. Federal Reserve is on Instagram now. That is correct. Federal Reserve is on Instagram now as well. Sounds like Karp's hair. All right. That's it for me, everybody. Thank you all for joining. I appreciate it. We will see you tomorrow. I'll have a couple of videos coming out today on the NHS updates for Palantir, and so we'll go deeper on that. Finance Junkies at 7 p.m. We'll try to break down some more stuff that's happening. And yeah, 10 years got to come down for equities to go up. Maybe we got to get to the 200-day moving average on the S&P 500 to really get some more money and liquidity entering the market. Jobs report was really good in regards to inflation. That's why we're seeing some green. And we'll just keep seeing how it goes from there and keep going. Thank you, everybody. Have a great day. Have a great Wednesday. And I'll see you tomorrow on the Market Open. Have a good one, everybody.